is one of the first names you'll think about when you hear the words big pharma. Investors piled into the stock in March of 2020, and the price of Pfizer stock more than doubled by December of 2021. But Pfizer stock is down 25% in the last 12 months as the company expects demand for its Comirnaty vaccine to drop sharply. I'm happy to welcome back Chris Markoch today to discuss if it's time for investors to buy into the dip on PFE stock. Chris, how are you doing today?
I am fine, Lacey. Thanks for having me back. I've had my eye on Pfizer for a couple of years now. I didn't get in on it when it was going up as much as it did. But there is recent news that suggests that some investors may be getting a shot in the arm with it. So it's time to take a look at it.
All right, I see what you did there, Chris. We'll get into that in just a second. But first, everyone watching this right now, if you would just click the subscribe button for us, we'd really appreciate that. We want to help investors like you stay on top of the market. In addition to that, be sure to check out the links I've included in the description below to help you get started on a more successful investment strategy. All right, Chris, tell me about this acquisition.
Okay, so I'd say maybe about 3 weeks ago, there was an announcement that Pfizer was going to acquire Seagen for $43 billion. And this was something that I had to double check on because I remember that Merck was in conversations to buy Seagen, but those talks apparently broke down because Merck wasn't willing to meet Seagen's asking price. So now Pfizer does meet Seagen's asking price. So it raises the question in my mind of when is that going to start paying off for investors? According to Pfizer, they're expecting that by 2030, the acquisition of this business should be providing about $10 billion in revenue. But so far, since the news came out, analysts have been not suggesting that they're buying into that theory quite so much. The stock hasn't moved a whole lot.
All right, you recently wrote about Pfizer and you described this acquisition as a way of Pfizer to flip the script. What do you mean by that?
So this all has to do with the C word, and the C word I'm talking about in this case is cancer. According to Pfizer's CEO, oncology is the largest growth driver in global medicine. And Seagen, they're an innovator in the oncology field. They're a pioneer in the field of what's known as antibody drug conjugates, ADC technology. They have 4 medicines that are already approved by the FDA, and they are also have those same 4 medicines in late-stage clinical trials in which they're trying to expand the label to include different tumor categories and also for expanded indications that will allow them to reach a broader patient base. And Pfizer isn't absent from the oncology field. They have a bunch of medicines in their pipeline as well, but this will be an additive effect. As we've talked about with a company like AbbVie, companies like this, it's all about the pipeline. So this should help Pfizer move that ball along.
All right, that makes a long-term case, but it doesn't sound like enough to make Pfizer stock undervalued right now. Or am I missing something here?
Well, you're not. I mean, I guess objectively, Pfizer could be considered undervalued right now. I tend to look at the fundamentals. I can't help but notice Pfizer's trading at around 7 times earnings. Even when you look at the estimates for earnings for next year, they're probably going to be coming in at around 12 times earnings. I've been listening to some people who have been talking about the broader market. They're saying the market needs to come down. The S&P is currently trading up around 18, 19 times earnings. They're saying that needs to come down to about 15 times earnings. So however you look at it, Pfizer is probably a little bit undervalued right now. There's probably room to grow, but this is one of those times where then there's the other shoe, and the other shoe says sometimes companies are undervalued for a reason. And you have to be a little bit careful with that, even though Pfizer does pay a nice dividend and the yield is over 4% the last time I checked. But I think really right now the question is that if you don't already own the stock, there appear to me to be some other stocks that would be better buys at this time. It's kind of one of those things. I like the stock now, but I don't really love the stock. And without loving it, I just don't think I'd really want to get into it at this time.
All right, everyone, you heard it here. If you're a long-term investor, the dip in Pfizer stock might be your opportunity to buy into a company that has a strong track record and a promising future in the oncology field. Thank you, everyone, for watching. We hope you enjoyed this discussion and it was helpful for you, but don't forget to leave your feedback for us in the comment section. We do want to hear your thoughts on the stock and what kind of analysis you'd like to see from us next. All right, thanks again, Chris. We'll talk to you soon.
You're welcome, Lacey. Thank you.